Let's talk about S Corporation today. $30,000 taxes due to IRS becomes zero. Let's look at it because I am tired, you are tired working for IRS. Are you leaving thousands of dollars on taxes just for IRS to collect? It hurts. I had to pay 1 year almost $40,000 and my gross income was about $100,000 because I had not learned about the S Corporation and I was filing everything in my regular tax return being a solo proprietorship. Well, the first hit I got was 15.3% and upon asking, that was a self-employment tax. I'm like, really? And then I'll be paying more taxes to federal IRS according to our joint income. So I was losing about $25,000-$30,000 shaved off from my $100,000 profit. It hurts. It was so bad for my heart. I'm like, wow, if I work for a year, first 4.5 years are going to be just working to pay taxes. There has to be a way. And guess what? Upon talking with great CPA, I interviewed some, I came to know the formula. I'm going to share that with you and you are welcome, or not only welcome, but please consult your CPA because this is what I am telling you from my own experience and my own accounting, my financial future. So let's see what is S Corporation. Basically, when you are self-employed, you have three ways. You can do the deduction as a solo proprietorship, you have LLC, or you have corporation. Under corporation, there are two corporations, S and C. Today, we are going to take S Corporation. When you file a Schedule C or LLC, you are going to pay self-employment taxes, period, okay? There are many more deductions which I will give it to you. But right away, you will pay $15,300 as taxes, which you need to save it in your account because you'll be paying that on your quarterly schedule or yearly schedule. So what are the other exemptions I'm going to ask you to take? Let's just go list one point by one point. There are 7 tips, so let's go through that. Just think there is a chalkboard. And I am writing on that chalkboard $100,000 and 15.3% minus. Take it out because now you're in S Corporation. Wow, you saved that money. Isn't that great? Then you take a second deduction. Self-employment tax is gone and now you can contribute to solo 401k. 401k IRA, everybody knows, is towards your retirement fund. But that, when you start saving it and put it in the account, it will grow, but it is tax deductible. So you got your second deduction of $15,000. Now, it is mandated for you to take a salary. So give whatever is reasonable salary, but in my case, it was $1,000, which I paid towards me as every month I will take about $1,000 a month. Now your total deduction is $12,000 because it was salary paid. Fourth deduction, you can make any of your family members, anyone, you can put them on a payroll too. I and other people do is give some work to your children, your wife, whoever, give them up to $14,000 a year, which is tax deductible. So see how you are adding up to your deductions. Another great thing about S Corporation is you can write off all the expenses which occurs for the business growth, for marketing growth, for discussing future of the revenue, to talk to the shareholders. Now guess who the shareholder is? Shareholder could be your spouse and you can write it off all the lunches, dinners, and vacation. Well, check with your CPA because there are paperwork requirement and there may be a limitation. I will tell you, go ahead and write everything after every expense you think you are going to put it as a business deduction, $500 here, $500 here. Say totally you spend $3,000 on lunches. Maybe you spend $10,000 for 2 of you for a vacation. Write it up, deduct it. And you're using a home office? Check it. If it is so, take the prorated square feet and count the expense of that room and the utilities. I take another $3,600. Say anybody can have $3,600 between phone, cable, electricity, if there is a gas heating, and room rent. After doing all these deductions, guess what? You will have leftover maybe of $14,000 left. Guess what? There are again no taxes required if your income is less than $14,000 for a single person. $14,000 or maybe few dollar, shortage. I think it's $13,850. But if you're married and you are filing this with your spouse because they are the shareholders, then you can go up to $20,000 and you make it, there are no taxes to pay. So guys, here you can go crazy with your imagination. Expenses are critical to write off, but gross revenue is calculated with taking out all your business expenses. I talked about today the other tax exemptions which you are allowed to take. Okay, so guys, I really hope this video helped you because that was the purpose. The purpose is, guys, whatever we earn, let's keep the maximum with us because who work hard? Us. And let's not waste the money, I call it a waste, by giving it to IRS because we just don't want to do due diligence. This is called due diligence. Talk to CPA on a regular basis. Talk to your financial planner on a regular basis. Guys, this is a new year, new thoughts. Your focus should be to keep the maximum money of your earning for you and your family. See you all next week, but I'm sure a lot of people have a lot of questions. But before you implement anything, please call your CPA. Like, subscribe, and comments. That helps me and that keeps going. Thank you. See you soon.